Hey, what's up, guys? Thanks for being here today. We'll go ahead and get started here. Let me pull up the screen. You probably cannot see anything yet, so I'm going to go ahead and pull up some charts and we will get started. I'm going to spend the first portion going through the charts, the market, real quick, just to kind of give a quick update on that. And then for those that want to stick around, I'm going to try to use the bulk of the time doing some educational type of thing, covering breakouts, different strategies to play there, and those type of things. So we will get to it here. Let me I'm gonna pull up a couple more things here, and then we'll go ahead and get started. Let me go out on the Slack channel and let everybody know that we are live now. Sorry for the delay earlier. I did have an appointment this morning, and then it ran later than I expected, and put this out. Didn't want to be rushing into the stream before I had grounded my bearings here. All right, so let's see here. Where are we? Sorry, guys, I'm pulling this up. Thank you, Brandon, for posting that link. Okay, cool. So we'll get there here. Let me pull up the slides. Let me pull up the charts here. We'll take a look at those. And I'll be monitoring the chat box here. So if you have questions, post them there. I think I've answered most of the questions on Slack. I'll go ahead and get started on that here. Let me see. I think we've got it covered. I'll go ahead and pull up the screen here. All right, so let's go take a look at Bitcoin here first. So BTC, let me start by just zooming out here. I'll close this out here for us and close that out for us. And so taking a look at the most recent action, we are still within this rising channel that we are in. I mentioned I was looking at a potential for a bear flag on the daily. And just keep in mind that the longer this channel continues, the less likely that's going to be to play out. Typically, bear flags are kind of short, a little bit more squared looking. You can see we had a couple of very clear bear flags on the way down. Let me find my channel marker here. On the way down here, during the last little pullback, that was a little bear flag there. That was a bear flag there. And they're generally short-lived into a moving average, and then they pull right back in. This one is starting to become less and less of that, but it's still in play. And the thing to keep in mind here is this lower trend line at the end of the day. If there's a big breach of that, especially on volume, that's going to be pretty significant. So that's what I'm looking out for. But within this rising pattern, you can see for the most part, I mean, since the start of the month, right, we've been just in this range, right? It's been very range bound, just kind of tightening up, not a whole lot of consistent trending up or down. And generally, that's what we want, right? We want trending markets that are moving quickly in one direction or the other, like this, right? Because this makes for some better trading. And this is going to go kind of hand in hand with what I'm going to talk about today. But this is generally what we're looking for. This type of action, right? This sideways action here is usually not very conducive to trading, only because your trade results are minimized, meaning the upside potential is limited. You might be making 5% on the upside, but you're taking a 2 or 3% risk. And at the end of the day, it's like that old saying, right? Is the juice worth the squeeze, right? And so most of the time, you're just kind of waiting those out and preferring to see some trending type of action with some more follow through. And that's what we prefer. But keep in mind, not every day is going to be a trading day. Not every week is going to be a strong week. And in fact, there are some statistics for for a lot of markets, it'll vary from market to market, but generally, like in higher trading markets, Forex, crypto, futures, it's kind of the old ratio is generally 2 out of 5 days will be good trading days. So 2 out of 5 days in a week. The challenge is we never know what those 2 days are going to be. They could be Monday, Tuesday. They could be Tuesday, Friday. They could be whatever. And in crypto, the ratio is closer to 3 out of 7 days. And so it's still within that ballpark. 40 to 41, 42% of the time will be a strong trending market. The rest of the time is choppy action, consolidation, trend reversal. And so just keep that in mind, right? We have to take action when we think the trend is going to change or continue, but you never know if you're within that, hey, I'm in the off days, or if we're trending, right? And trending includes this too, right? If you're shorting, this is a trending market for you to be shorting, and then there's kind of this rest period, and then there's another trend, and then another trend. So it just depends on which bias you're looking at. But most of the time, we're looking for the bullish bias. We're looking at the upside, and that's what we're wanting to do here. So right now, Bitcoin's been, I mean, if you look at the daily chart and you go back, for a couple, not even a couple weeks, but a week and a half, right? The last 10 days or so, prices have been in a very narrow range. I mean, if you look at where we are now down to back here, I mean, you're talking, what, a $400 or $500 range on Bitcoin in the course of 10 days. That's very narrow for most standards, right? Usually they don't sit that tight for that long. They tend to break out after a while and then start moving higher again or moving lower. And so these markets make for tougher trading because, like I said, there's not this strong trend. But the good news is they generally don't last. I mean, it's pretty rare that Bitcoin stays in a $500 range for, 3 weeks or something, right? That's a very rare phenomenon. We saw the last time we saw something similar to that was at the April low, where we were in a range, right? You can say, and this was even a wider range. I mean, this range was $1,000 range, but you can see towards the end of that, for about 7 days, it got into a $600 range here. And so the fact that we've been trading in a $400 or $500 range here for over a week now, it's pretty rare, and it does make for some tougher trading. Most of the alts aren't really taken off; they're not on fire yet. But I think it's not gonna last. We've been in this transition period, kind of been sitting tight, quiet. There's a little bit of hesitation here. People are wondering, is this the low? Was the 7,000, 7,100 range the low there? Did we make a higher low, or is this just a bounce and we're gonna go lower? Is 8K gonna hold? Right? There's a lot of that hesitation going on right now. So just keep that in mind. Until we break out of this, it's going to be tough trading. I mean, that's just the nature of it. So until we either, let me draw that again, until we either clear out that 8K or clear below this, in this window, it's just going to be tough because we're not showing any conviction one way or the other, right? There's not this powerful move higher, follow through. It's just kind of, oh, we're up, and then we go sideways, and then we're down, and then we go sideways, and then we're up. And, it's one of those. And so just remember, trading is a long-term thing. You want to preserve your capital. It's okay to take shots. We certainly have this week. I'll go over some of the trade reviews here in a sec. But the name of the game here is during these markets, either you're not trading at all, and you're waiting for some strong confirmation like something like this, right? You're waiting for one of these days, or you're taking some shots, but you're playing it tight, meaning, I'm willing to give it just a little bit to the downside. I'm not willing to give anything 10% or more in terms of stop losses because I'm not expecting to get 20 or 30% on the upside right here. I mean, that's just not the nature of it. Right now, the best trades we've seen have been 10% upside, right? And so just keep that in mind. All right, so Bitcoin right now, what I was looking at yesterday was, let me clear the channel here just to kind of clear our eyes a little bit. And let me clear this moving average here. So what I was looking at was a takeout of this resistance level, which it did not, at least not yet. And so we wanted to see that taken out. We rallied up to it. We failed and had a pretty quick pullback. But again, you noticed on the channel that I had drawn that pullback did land at the lower trend line or pretty close to it, depending on how you're drawing it. If you're using the candle bodies, I mean, it was right there. If you're using the wicks, not quite as close, but still came right back to that. And so we're coming to a head here, right? It's rising, still living below this resistance, but the lows are getting higher. And so this range is really starting to narrow here in the coming days. And so, like I said, this sideways action, this meandering in this range, it's not going to last much longer, in my opinion. Probably before the start of next week, we'll see prices taken out either to the upside or the downside. And so if we take out this level here, and you can argue this is an ascending triangle, by the way. If we take this level out, right, then next target is pretty clear. We've all been talking about there's not a whole lot of room at that point between here and going into that 8K level. And so I would expect that this little gap here would be filled pretty quickly if we break out, right? We could probably quickly just jump to the next level, and vice versa if we start to break down below this trend line that we're seeing now. So price point, basically call it 7,500, right? If prices lose 7,500, I don't expect this 73.60 to really hold much. It's going to really start to create some momentum. This will start to look like a double top. And then at that point, we're probably going to retest this level at best, right? Or a little bit higher. So that's what I'm looking for. And we're going to find out here pretty soon, right? Just because this is really starting to narrow, right? This is really starting to get tight here. And generally, they don't usually go right to the apex of these patterns. They tend to break out beforehand, one way or the other. But at the end of the day, we're looking for volume on this, and this could be a breakout play, and it's going to be what we're going to be talking about here today is breakout strategies and things to look for. And so this is kind of a perfect scenario for that if you're trading BTC here, or the alts. But if Bitcoin breaks out, I expect the alts to follow through on some of that as well. So so that's Bitcoin. I'm in cash right now. I'm just sitting tight only because there isn't a trade here. I mean, there's really nothing to do. There maybe the one trade was you buy the dip into the trend line, right? That's if you're looking at a rising trend line and you're saying, hey, we're making higher lows. This was a pretty good low. Then down here, you're taking a shot at the trend line with your stop right, down here around 74.80 or something. That was probably the only trade right now that you would call like a trade setup. But other than that, there's nothing to do, honestly. I mean, it's wait for a breakout. We're waiting for a signal one way or the other here. So let me pull up. I just realized I don't have the chat box open. So let me move this over to my other screen and get that for you guys. And then we'll take a look at some of these other charts here. So all right, so we got Brandon in the house. Edward, all right, cool. All right, so let's keep going real quick. Some of the other trades that we were looking at here. So I mentioned Binance Coin, and I used a different strategy to enter that. The good news is I nailed that entry pretty good. The bad news is I got out way too early, and I should have let this one run longer, but I jumped out for a couple of reasons, right? The market and different things like that. So let me show you what I was looking at here. Now, I did double top yesterday. This is trying to bounce, but this looks pretty weak. Once it broke this neckline, now to me, that's the level you got to get back above to negate this. And so I'm still looking for some more consolidation on this guy right now. But where we did jump in was around 1441 here at the lows. And I got in right here. This was the pattern that I was looking at. I was using a moving average strategy on this one. After this reversal, we had a crossover, and then we had I was basically using a candlestick pattern, right? Once I saw that moving average crossover, I was going with the candlestick pattern at that point. And this is what I was watching here. We had the pullback, and we had a rally, and then we had another pullback into this. And so my entry was a close, or basically not a close, but my conditional order was above that. It was like 1440 when I posted that. And so I thought if I get in, if this, because this next bar hadn't really finished with me, sorry about that. This bar hadn't finished when I posted it. It was green, but it was still below this red high, and it was like right here. And I thought this one's looking pretty good. If it blows out above 1440, I'm jumping on. It didn't take long. I think like literally within 5 or 10 minutes of posting that, it jumped on, and then it filled me. And so my stop was the low of that red bar here. And so that was my stop entry. Very clear support range being defined here at 1440. I think my official number was 1410. So I was willing to give it a little bit of room to the downside, only because if I got filled at 1441, 1410 was like just a little over 2%. And to me, that was very acceptable, especially considering Binance BNB or BNB BTC pair was nearing highs. I thought this is going to have a little bit of a run. It broke out, had a quick rally, and then it gave you a throwback. But look at the stop held barely, and it retested the support. And then we turned the corner again. Then we started going. We had this little rally here, and then it looked like it was about to roll over. Started seeing some big volume here. And so I took some profits too early. And then I did mention if it closed above, I think it was 1554, get back on. I didn't get back on. I missed that. And then it rallied to 17. And that's where we saw the most recent double top. But all around, this was probably the strongest move of the week. Most of the other names haven't moved quite that much. Had I held on, you know, no one's going to nail the top, but that would have been at least a 15%er, give or take, you know, because I probably would have sold on this reversal bar with the big volume here. So that was Binance. Most of the others, Ontology, I did get out only because I didn't want to give it that much room, and that was because I didn't get in as early as I'd wanted. I was initially looking for an entry here around this 104 area. I know some of you guys got in on that. That was pretty good. But then I took this breakout here, and so I ended up getting in around this like 110 or so. But it hasn't really done anything since then, right? It did have a little bit of a rally, and it moved higher, and it was up about 6 or 7%, and then lower, and then it's just been very choppy. It retraced right here, and then I tightened my stop up when it started to move higher, and then this pullback got me out here, unfortunately. But right now, it's just kind of still choppy, not exactly moving higher. This is the 1 hour chart, keep in mind. If you go to the daily, that looks good, right? So a lot of it just depends on your time frame. If you're trading daily charts, you got to give them more than 2% stop. You got to give them 5 or 10 generally. But this one still looks good from that perspective, and it may be setting out for another breakout here, especially considering this is a new high territory. This is a continuation, so that's what I'm looking for now. I still think it's good, but I'm just watching this here for a potential breakout, and it could coincide with a breakout on the BTC side. Oh, cool. Did they finally post a USDT pair on Binance? I didn't notice that. Thanks for sharing that. Binance, I mean, it's going to be great when they keep adding USD pairs. I mean, they've already got quite a few. And the good news is there's a lot of volume on those. You know, if you look at some of the USD pairs on Bitfinex, like they're almost worthless. Like they don't even trade volume. So it's not even worth having them. But yeah, that's great that Binance is doing that. So got out of that. VeChain made a small gain on that guy, or on ZIL as well. But then with the rollover we had yesterday, it just took me out because I was tightening the stops. And so I moved it up here, and we saw this takeout down here. Now we're bouncing a little bit, but this just feels like a bounce. It doesn't feel like a reversal to me at all. It just feels like a continuation of this new pattern that potentially is forming, lower low, lower highs. ZIL, same thing here. I got in at I think it was 1647, and then that was right here. Had a pretty decent run, and actually I think I got in here on this bar. Had a pretty decent run. I was, you know, it was up about 5 or 6%, and then it pulled back, and then I was up like 2 or 3%. And at that point, I mean, it wasn't really worth nailing a 2 or 3% profit. I was really looking for the broader uptrend to hold and then just continue higher. So I thought I'd let it ride. Then it really started to lag, and so I raised my stop up to here, and it got taken out. So, you know, at the end of the day, it was positive, but hardly worth anything, right? It was like up. What was the end of the day here? I was up like 2%. So, whatever. Not exactly an awesome trade. OMG took that one late yesterday. That one was looking really good, and I'm going to talk about failed breakouts today because that's one of the challenges with breakout strategies is you just got to deal with failed breakouts and things to do to avoid them. But everything here was lining up. If you look at OMG, the RSI was strong. It was at 61, moving above that 50 mark. MACD had crossed bullish on this, was getting above the zero line here. The volume on here was well above average, almost double the prior bars and higher than most of any other bars. You could say this was a little bit of a double bottom. At the end of the day, it cleared resistance with some good volume. And then I took a pullback entry on this right to the breakout point there with the intention there being, hey, this thing's going to hold or just slightly dip below and then go higher. And then when Bitcoin sold off quickly, this thing just pulled right back in and hasn't been able to get above that breakout point yet. So this was a failed breakout, and that's part of the game, unfortunately. But it was a I think what was my entry? It was like 1150. I got out at 1125, so that got me out right there. So it was just a little over, but less than 2.5%, and that's acceptable risk in my opinion. Everyone has a different tolerance, but for the time frames that we're using, if you can take a shot with a 2.5% risk, then that's good. Now, would I have given it a bigger risk? Could I have given it more room? Like, hey, why not use 5 or 6% or something and stay in the trade? You certainly could, but here's the thing with trading. If your trade's going to work out, generally speaking, you're not going to have to wait a day and a half to be right. Like if this was a breakout and then the pullback and then we entered, at most a few more bars and then it would go higher if this trade was going to work. It didn't do that. And so that's why I generally won't want to give it that much time, right? Now, if you're hodling and you're buying for a longer term gain and you're thinking, hey, this may be the low, that's a whole nother strategy. Then at that point, yeah, you're giving it down 10% at least, and you're banking on the daily bigger trend. But at that point, we're trading. We're looking for the gains in as shortest period of time as possible, because if you're in a trade that's below water and you're in that trade for days, psychologically, it's just not good. It takes your edge away. It's just not what the intention is. We want to be in a trade where we get in and it looks like it's going to work and it starts moving quickly. And if it doesn't, then it is what it is. And we'll go look for another opportunity and we'll come back to this one later if it sets up again. So just keep that in mind. I mean, that's generally why we keep a tighter stop. And then EOS had another breakout, and this was a big failed breakout. You can see we had this nice continuation pattern here. We had the breakout on volume. Look at the volume there. Very nice. Pulled back right to the breakout point, held, broke out on volume again, very strong, and then just bam, rolled over hard. Failed breakout, major red flag there. Just get out of the way at that point, right? So that was a failed breakout. Everything was setting up nicely. RSI was looking strong. MACD was looking strong. I mean, this thing was it was set up, right? It was a good ascending triangle here at this part. I was like, wow, this is a nice looking chart. The BTC. You already told your wife for EOS. The BTC chart. Oops, wrong one. Was also set up nice, and it just this was pre-breakout, right? The USD pair had already broken out, and this was building this consolidation right there. Look at the volume, lower and lower volume. I mean, beautiful, and you couldn't have complained about this setup. I mean, it was a good setup. RSI was strong, MACD was strong. I mean, there was nothing here in terms of bear signals, and we were here. We broke out. Now here was the one bear signal on this breakout. On the BTC side of the breakout, there was no volume. It was below average. So that was the red flag that probably would have said stay out of the trade. But I jumped in as it was breaking out, so I didn't wait for the candle close. I did notice it after the close. I said, oh, that's not as good as we would want. It looked like it was going to follow through, and then it rolled over. So those are things to pay attention to when we're looking at these. But on the setup, man, you couldn't have asked for more here on this setup. You got the declining volume, the congestion there, and then the move higher on slightly above. It was higher than the prior candle, so it looked like it was going to be above average, but it never did. So that's it, guys. Kind of just wanted to recap some of those. Certainly not a strong week across the board, but I don't expect that to continue. I expect movement one way or the other here in the coming probably next week, by the weekend, most likely. So, and then for those of you that follow Luke Martin, the venture coinist, he does a lot of trading and stuff. He posted this earlier today, and just kind of gives you guys some perspective here. The BTC 30-day volatility is at a 52-week low. And why is this important? Because as traders, we want volatility. We want movement, right? Because that's how we're profitable, right? We're profitable when there's volatility, when there's quick moves up, quick moves down, new braces, new setup, when the market is strong. When the market is not volatile, that means it's a little stagnant. And so the good news is when something hits these, yearly low volatility, the same in the stock market and everything else, it tends to have a quick reaction to the opposite end, meaning I expect volatility to spike here because we're at the lows. So, but that just kind of gives you a feel for, hey, that's the nature of this market right now, is the lower volatility type of an environment. All right, so very quickly here, I've already taken up enough of our time looking at charts. If you guys want to look at a few more names when we're done with this quick slide spiel, just drop them in the comments and I will make note of those and we'll go back to the charts. But I do want to cover this and then we'll go back to the charts and look at some examples. And so when it comes to trading strategies, I mean, there are literally thousands of trading strategies that you can employ. You can take strategies, you can make them your own. You can build your own, test them, add rules to them. And at the end of the day, that's what strategies are, right? They're just a set of guidelines. They're a set of rules, but they're important because it gives you a framework to trade within, right? Some people only trade like one or two strategies and that's it, and they ignore everything else. And I know some folks that are even so focused that they will only trade like one or two markets, right? Like some guys that I know, they only trade Bitcoin and maybe Ethereum, and that's it. They don't trade any of the alts, they don't trade anything. And there's nothing wrong with that because then you get very comfortable with one asset type. And so there's a lot of guys that they only trade gold, or they only trade a specific Forex pair, or they trade like their top favorite 5 stocks over and over and over using one or two strategies. And so it's good to kind of figure out what strategies you like, which ones you're comfortable with, because then you get better and better at using them. And then everything else that doesn't line up to your strategy, you just forget about it. You let it go, right? You don't FOMO into trades. You don't try to force trades. You don't try to look for trades when you're bored and you're like, I want to trade something. If it doesn't line up with your strategy, then technically you shouldn't be doing anything. You just wait. And so that's what they're important for. So I'm going to be talking about breakout strategies. It's a type of strategy. There's different types of trading strategies. There's trend following strategies, which are probably the most profitable and what most of us look for. There's reversal strategies or counter trend strategies. So a good example of that would be like an oversold bounce play, a inverse head and shoulders kind of reversal play. And keep in mind, reversal strategies are higher risk and they're generally lower profit, but you can use like oscillator extremes to play these, right? So if RSI is like way oversold or way overbought, you're looking for signals to do a reversal strategy. There's range trading. This probably aligns more with scalping. If something's in a box, in a rectangle, and going sideways back and forth in a very defined range, then that's easy, right? You sell the tops, and you buy the bottoms, and you go back and forth, taking the little spreads. And then there's breakout strategies, which there's overlap between some of these, right? There's breakout strategies within trend following strategies or within reversals. And so we'll be looking at that. And then there's pattern strategies. That could be candlestick patterns. Some folks just strictly play, they do naked trading, if you will, where they're just looking at the candlestick price pattern and that's it, and they're trading certain things there. Or what we're going to look at different patterns, the classic patterns, ascending triangles, that sort of thing. And then there's time cycle strategies, right? There's people that are only buying, they're on Elliott waves or on sequential numbering, and there's different types of time cycles. In commodities, there's seasonality, there's stuff like that. So just this is an example list. It's not an exhaustive list of strategy types, but these are kind of the most important ones. And as always, the trend is the most important thing for any of these strategies, because if you don't know what the trend is, then you're just going to be shooting in the dark. You're taking shots, right? So you got to know the trend is. Is it up? Is it down? Is it sideways? So a breakout strategy is basically where traders are trying to identify an entry point, right? So keep that in mind. We're looking for an entry point at a breakout from a previously defined range. And so at the end of the day, you're looking at support and resistance. That's it. We're looking for momentum, right? That's the expectation with a breakout strategy is there was a prior trend, and then there's a consolidation or there's a defined range. Another way to do that is like Bollinger Bands getting narrow. Maybe you look at breakouts when you see that, a certain signal there. So there's a certain ways to do it. But at the end of the day, the expectation is we want momentum, right? We want a powerful move out of this range, and then we want it to continue. And that could be both on the long side and the short side. You could be saying, hey, I want to break out to the upside. Or if you're looking at a downward trend, a descending triangle or a box or something, then you're looking for momentum to the downward side. But at the end of the day, that's what it is. It's a breakout or a breakdown strategy where the expectation is momentum following a break of support and resistance. So the most important thing with the breakout strategy is defining what is support and resistance in this chart. What's the trend before this? And you're looking for a continuation. So the types that I'm going to cover here, I'm not going to cover pattern breakout per se, just with like the different types of things, but I'll talk about, just classical range breakout, the breakout and retest, right, which is basically like OMG yesterday. And then I'll do a very quick Kumo breakout, which is using Ichimoku's. And so the pros and the cons of breakouts. Many breakouts will retrace, right? Either fully or partially. So that's usually good because you get the breakout signal and then you usually get an opportunity to jump on. Not always, of course. Some things break out and then they're gone and they move, 10 or 20% before they give you a good low risk entry again. There's going to be false breakouts. A lot of them. Breakouts nowadays, I've noticed, have been working less and less than they used to. And so just keep that in mind that it's going to be part of the game, right? They're false breakouts. They're inevitable. You're going to have to be willing to take some false breakouts, but we'll discuss some ways to minimize jumping on false breakouts and only taking the better setups, right? So kind of you're going to pass on a lot of opportunities, but you're going to get the stronger setups. And then this requires patience, right? So because most breakout strategies work best in trending markets that are moving higher. So if we're looking for an upward breakout, it means we've already moved higher, momentum's to our back, and then we're pausing and we're looking for a breakout, right? So those are the best breakouts. If you're looking for a breakout after a downward trend and then it's going to go in sideways, I mean, like the current market, it's going to be a little bit harder. Generally, when there's a prior run-up, those make the better breakouts. So bases and breakouts, I'll use the term base. It's just basically an area of consolidation. The longer and the more structured, the better. And bases will vary, right? Sometimes a base could be a pattern like a cup and handle. That's a base. Sometimes a base is not really defined. It's just a consolidation area. And then, of course, the breakout, also called the pivot point. And so if you're looking at patterns and you want to buy breakouts to the upside, these are the best ones to look at. And by far, number one, my favorite to trade is the ascending triangle pattern. Hands down. Like if there's a prior run up and then this thing builds a very strong ascending triangle pattern and then we have a big breakout after that, these generally are the most profitable. They usually have the fewest amount of false breakouts. They usually break out stronger and they run more. Then second best would be cup and handle, again, after a strong run up. And if you see a cup and handle, I like playing those. A bull pennant is good. They're usually shorter than ascending triangles. So you have the quick run up, and then you have a little consolidation, and then another leg up. Some people call this equilibrium patterns. It just depends on the time frame, but bull pennants, and then the bull flag. And they're slightly different, right? The bull pennant is more symmetrical, the meaning it's equilibrium. It has higher high, higher low, and it just starts to tighten up. Whereas the bull flag is a little bit more squared, and it drifts lower, so kind of like a sideways or a lower channel. But then when it breaks above the trend line, that's the breakout point. And then, of course, there's symmetrical triangles, but that's a little bit more neutral. Could go either way. That's like a giant equilibrium pattern. And then, of course, a sideways channel or a rectangle, and that could also go either way. And then the bearish bias, it's going to basically be the opposite. So if you're looking to go short, descending triangles, bear pennants, bear flags, and then these two others. And then there's reversal patterns, not necessarily breakouts, although you can buy breakouts from the top of a double bottom, or excuse me, from the the double bottom, or the inverse head and shoulder, or the falling wedge. But the reward potential generally on these moves is a little bit less than, say, you're buying a breakout on an ascending triangle, right? So just because there's more overhead resistance you're going to be facing on those type of patterns, but there's still good reversal patterns that you can trade. Just don't expect them to be like 100% gainers right away. Generally, what happens though is these patterns will reverse and then consolidate and then turn into these patterns. So that's good, right? That's what you want. And so here's the breakout checklist. And when you're doing a trading strategy or a system, I recommend only using a handful of indicators that you use as a checklist. It doesn't have to be these. These are just for ideas. These are some of the ones that I look for, but there's a lot of them out there you can use. You can use momentum. You can use the stochastics. You can use parabolic SAR. You can use a bunch of different things to validate what you think you're seeing on the chart, but only use a handful, right? Don't use like 5 or 6 different things. Use maybe 2 or 3 to kind of validate what you're seeing and go with that. So some of the ones I look for, number 1 on the list, volume. When you see a breakout, there's better be volume on the breakout, because remember, we're looking for momentum. And if there's no momentum behind the breakouts, it's kind of one of those, is it really that strong of a breakout, or the sellers overrun? That's what you're looking for there. And then I use RSI. And so there's a couple of ways to use RSI. So I have it listed here 3 times. The first one is the RSI above the middle zone? So is it over 50? And generally that's kind of like the bullish zone when something is over 50. I like over 60. For me, that's a confirmed bull. But if it's over 50, that's usually my minimum. Is the RSI overbought? So think about that. If you're looking to buy a breakout, but RSI is already up there like at 79, how much more room does it have to go to the upside? Is it going to be a really strong breakout that takes you up 20 or 30%? It could, especially when markets are going, parabolic, but generally speaking, it doesn't, right? So you want RSI to be strong, 50 or 60, but you don't necessarily want it to be like, at 80 when you're buying the breakout, because it's higher risk at that point. And then look for divergences. So very similar to the RSI overbought. If you're looking at a breakout and it's making a new high, but your divergence is starting to really build, or if you're trading, higher highs, then if you're buying, like, say, the third peak on a higher high and you're looking for a breakout above that, but there's some bullish or bearish divergence showing up on the RSI, might not want to take that breakout trade, right? So just look at that. MACD, very similar. Is it sloping higher? And even more importantly, is it above the 0 line? This is the same kind of equivalent of RSI. Is it above 50? If it's above the 0 line, that's stronger generally. And then bullish cross, right, is the MACD above the signal line. You can also look at Ichimoku, right? Are we breaking into a cloud or above a cloud? And how is it relative to the Tekkin Sen or the Kijun Sen? And then my personal bull momentum index, I use that. I check it for higher time frames. And then this one's important. A lot of people don't do that. Favor. What is the primary time frame that you're trading? And so think about that and figure out what's your more comfort zone, right? For me, generally, my signals are based on the 4-hour charts, but I look for entries on the lower time frames to kind of time it a little bit better. And so, and there is no one size fits all here. Everybody has a preference, and it depends on your trading strategy and your style. If you're day trading and you don't want to be in overnight, you probably don't want to do 4-hour trades because you have to hold overnight. So at that point, maybe you want to do day trades and you're looking at 15-minute bars, 1-hour candles, maybe 2-hour candles. If you're swing trading, you don't really care about the 15-minute bars, right? So it depends on what time frame, what style you're looking at. But in any case, whichever strategy or time frame you're trading, always look at the bigger time frame because you want to see what the primary trend is. And so this is what I mean by that. If I'm trading a 15-minute candle, then what's the 1-hour trend, right? If the 1-hour trend is trending down and my moving averages are confirming lower and the 1-hour MACD is bad and everything looks bearish, on my 15-minute candles, I should not be looking for long trades. I should be looking for short trades and vice versa, right? So if I'm trading the 1-hour, then ideally the 4-hour chart should already be going bullish, right? It should be confirming higher. I should see a MACD cross. I should see stronger RSI. And then I'm looking for long entries on the 1-hour chart, and if you're doing the 4-hour, then what's the 12-hour, 16-hour, the daily chart? What are those saying, right? So it just, whatever window you're in, check the bigger picture, just move up a frame higher on the time frame, because then this will help you to stay out of bad trades, right? So if like I said, if the 4-hour is trending lower and it looks bearish, I should not be looking for long entries on my 1-hour. I should wait for this to turn. It's just going to have more momentum, more wind to your back. Yes, that means you got to pass on some opportunities. Yes, that means you probably won't get the exact bottom or the exact top, but that's okay. The point is you're going to be in at the most opportune time, and most of your trades will be a little bit more successful at that point. All right, a couple more slides and we'll look at the charts here. So finding breakout candidates. Once you figure out what you want to look for, how do you find candidates? So look for the big winners, the prior big winners. The names that were up 20 or 30% a week or two ago, and now they're consolidating. Look for breakouts there. Look for continuation patterns, the ascending triangle, the cup and handle. The power pivot alerts I developed specifically for that. These are best when the market is going through a consolidation, or even a small pullback, because these power pivots start to flash, meaning, hey, there's some accumulation happening. Some of these names are trying to reverse. And generally, I like to buy names that are showing power pivots within the base, meaning before they actually break out. That's when they're the most useful there. But they also coincide with the breakouts. On the move, right? That's kind of a shorter term time frame, but it starts telling you when something's breaking out or about to break out. And then if you're doing the Kumo breakout strategy, you want to look for prior names that had a bullish cloud entry, because at that point, if it does an edge to edge and pauses, then you're looking for a bullish cloud exit, and that's the Kumo breakout strategy there. So there's a couple of different ways to do that. And so just remember, trading systems help. They make it less emotional for us. It helps you filter out the best of the best trades, but you have to accept that you're going to pass on a lot of opportunities because you're only going to buy the ones that line up with most of your indicators and rules. So, okay, so let's look at some charts here. So I want to talk first the, where was it here? The breakout and the retest, right? Well, let's look at a pattern breakout, because these are the most classic, the easiest ones, but not every market has that luxury. So a pattern breakout, one of the more recent examples that was very strong was Ontology, not Ontology recently, but Ontology in March. And so let me go to the daily real quick here. Here we go. So when Ontology came on the scene here, you can see what happened. And then I'll switch to the 4-hour chart here. Where are we at? Here we go. Still going. There we go. Right here. So Ontology comes on the scene, and there's this rally, right? We have the massive rally, and everyone's FOMOing, and everyone gets excited, and it moves powerfully. I mean, this thing goes up 100%, right? And look at how quickly it did that. 100+% in 15 days. And so at that point, it's on the radar. Am I buying it here? No way, right? This is overextended. Unless I got in on this secondary entry point, this is way extended. I'm going to let it go. If you look at the RSI, right, we were up here at 86 on the 4-hour RSI. I don't buy those, but they do get on the watch list, right? I start looking for secondary entries. I start looking for different points. So if you missed that initial run up, if you didn't catch it for whatever reason, there was really no signals down here to tell you unless you got this pump here. But if you missed that, then you're looking for another entry. And I noticed that it had this big pullback, then it rallied, then it made it high. It's like, okay, is this going to make a double top? Is this a cup and handle? And it started to pull back. And then this is when I started to say, hey, I think this might be doing an ascending triangle pattern, because now you've got two highs. And so you can very clearly say, here's resistance. And if this makes a lower or a higher low, then I'm looking out and I'm thinking maybe ascending triangle. Look at the volume. Volume starts drying up. RSI is cooling off. It's letting things kind of reset, and this thing does that. Okay, here's my new line. Keeps going, starts to rally right back to resistance. Again, 3 times, doesn't break out, but this thing's really tightening up. And at that point, it's a pretty clear ascending triangle. And then right here, it just tightens up for, a day or so, right? Back and forth. And then boom, there's the breakout. And so if you look at the breakout, this is a classic. This is new high territory, keep in mind. So we're blue sky breakout, ascending triangle pattern. Let the RSI cool off. RSI is back into bull zone here. Not extended, not super high, but definitely above 50. MACD is crossing bullish, right, before. So the breakout signals start showing up early, right? They're like, okay, hey, this thing held support, ascending triangle pattern. RSI is above 50. MACD is crossing bullish. Bull momentum is strong. Now you're just looking for the signal. And at this point, if you're watching this, if this is on your watch list, you could just set a conditional target or a conditional buy. Say buy it on, on a close above 345 or something, right? It's just that's it at that point. Or you could wait for a breakout, and then it breaks out. Volume's above average, definitely the highest that it's been in days for sure. And then it starts to move. No throwback on this guy. I mean, just breaks out, has a little bit of a pullback, but not a full retracement. And there it goes, right? And then following this breakout, we had another 65% move, right? So, and that happened again in 2 weeks. So very strong secondary move. So even if you missed this initial rally, if you were patient enough and you didn't let this fall off your radar, because I mean, think about it, this was quite some time before here and here. It was kind of like other things started moving higher. There was new names. It could have been just as easy to forget all about this guy, but it moved higher. And so all the signs were there. Lower volume on this consolidation, and then the volume started to pick up as this thing started to move higher. Then we saw this consolidation here, classic pattern, the ascending triangle, and then it breaks out. And of course, this is a new high breakouts, right? So these are the best ones, hands down, usually the most profitable, just because they're lower risk entry points. And then it goes higher and it does its thing, right? So that's kind of like the best scenario. That's this pattern breakout. That's a classic pattern. The same thing would have worked if it was a cup and handle or something like that, or even if it was just in range. If it just started arranging here near the highs, you could just still play that breakout too. So the other one is a breakout and a retest, and that's exactly the way it sounds, is a breakout and a retest. And so what you're looking for there is the secondary entry. You're looking for the breakout / pullback, and then you buy it, right? So here was a good example of that, and Ontology just had a lot of these recently. So this one also was moving higher, and you can see this was below resistance at this point, had a pretty deep retracement, and then this was the level to be watching, right? It's kind of bouncing up, finally breaks out, but then this is a little bit higher risk. It's not as clean looking, and so these are good for a retest if you don't catch the initial move, right? So let's say you're watching this, had this rally, it looks like it's failing, and then it has this breakout higher. As opposed to chasing that, you could always just put an order into the breakout zone, or even just above it, just below it. You can do multiple orders, right? But that's the idea there, is you're looking for a throwback, right? When you're doing a retest breakout strategy, you're betting on, hey, we're going to see a throwback. and I'm going to buy that pullback, right? So that's what you're looking for there. You can see this one did have that. Let me zoom in a little bit on the 1 hour. And then the one that we just saw right now with Omise Go was a good example of that. And so when you're looking for a throwback, let me see if I can find it here. There's two ways to play that. So here's I wouldn't say the rules, but here's kind of the guidelines for playing the throwback on the breakout. So here's the 1 hour chart. So it was clearly a breakout, right? Didn't clear resistance, but I like these, right? When they consolidate below the prior high, and they give you these multiple resistance points below, because these make for early signals. And so you can see here the volume makes sense. Definitely above average. And on volume, just so you guys know, my guideline is I want to see above average at least by usually 50%. Ideally, I want to see 50 to 100% above the prior bars. And so this one was well above that. So clearly strong bull breakout. And so here you're looking for a throwback if you don't want to chase this guy. And so you can put some orders at the line and look for the dip entries, or you can do this. You can say, okay, here's the pullback. And then what you do is you have to be a little bit more active on the reversals here. But at this point, let me find the line here. You're moving your buy point lower and lower every time, right? So you have this pullback. You can use moving averages too, by the way. That'll definitely show you, like, okay, look for a pullback to the moving average. But you're guessing, because the guess with the reversals is always, is it a false breakout? Is it going to do one of these? And do I want to buy it preemptively? And so the strategy here is you look for a close above the high of the prior candle as your entry point. And so here, it starts to pull back. So here it's touching the moving average. So if you didn't have an order already placed here, then you can say, okay, if it breaks above this candle, I'm buying it, right? So you kind of just move your price point here. So you're betting on that. And then the next bar happens, nope, nothing happens. Then this bar happens, okay, so now I can move my entry point a little bit lower. If it breaks above that, I'm buying it, right? And here's that, boom, there's your entry point. And so these are 1 hour candles, so you have to be a little bit more precise about it, as opposed to guessing that's the low, that's the low, that's the low. Just wait for the reversal, right? You don't need to nail the exact low. So here it is. That's my entry. I'm buying it. Here's my stop right there. Boom. Now it's moving higher. If it rolls over and fails and breaks below that stop, generally that's a failed breakout. And so this one doesn't, keeps going, gets you in at a pretty good entry if you missed this initial breakout. So that's where the breakout and then reversal strategy comes in, is because if you miss that initial breakout, be patient, look for a throwback. You're banking on a throwback. And if you don't get one, you don't get one, right? It's gone. You missed it, or unless you're willing to jump in and give it a white stop. But generally, I'm just like, whatever, it's gone. You missed it. But if you see one of these, that's how you do it. Is it higher? Is it higher? Is it higher? Is it higher? This one's higher. Volume starts to come in a little bit. The next one definitely does, and it's gone. So that's a good one there. You can also use that same strategy on a trend following strategy that I use. You got to use some moving average crossover there as your signal, but then it's the same methodology, very similar methodology there on that breakout. So so that's kind of the reversal. We saw something happen with OMG yesterday. You go here. Not there. I got all these lines drawn from my back testing and doing different things here. Here we go. So this was the same thing, right? So, and OMG was a little bit different case, right? So remember the rules. Is the trend in your favor, right? So here's the hourly was uptrending, and then had this pullback. And technically, it wasn't really trending prior to the breakout, but we did have this, so you could say that was the prior trend, and here we were basing. And then this was nice, the type of breakouts that I like that are below the actual prior high. And so at this point, you're just looking for this as the breakout. And so that was the breakout point there. And then I was looking at the same type of thing, right? Looking for these pullbacks. And it looked like it was going to go. Finally moved higher here on this candle, jumped in, but then just started to drift lower, right? So if you were Really conservative, you would say, I'm going to wait for the close. And so you're looking at the 1 hour close. But this would have got you in anyway, right here. This bar would have got you in using that same strategy, because you're saying, is it higher? No. Higher? No. These went higher, but they didn't go higher than that would have got you in maybe, but otherwise for sure this bar would have got you in. But then it still was a failed breakout, still reversed lower. So in any case, it was a failed breakout. And that's really where I was jumping in at that 1150. Okay, I think that's it on the breakout and retest. So just to kind of recap there, on the retest, you're looking for confirmation to the upside, and or you're playing the breakout and you're banking on a throwback. So you're putting orders right at the breakout point as soon as you see the breakout, and you're waiting for that quick dip lower and then to move higher. And a lot of times you get those. Sometimes it's just a wick. Sometimes you see the candle and it just gives you one wick to the breakout point and then it's gone again. And then so let's do one more, the Kumo breakout. And so this is using the Ichimoku strategy here, the Ichimoku indicator. And with this strategy, volume still comes in handy, right? You want to look for volume on those breakouts. And so here's an example of using that indicator. There is a couple of rules, if you will, on Ichimoku. One is if it's above the cloud, where's my marker here, right? If it's living below the cloud, that's bearish. If it's living above the cloud, that's bullish, confirmed uptrend, right? So that's kind of the trend rules. And then the other rule is, if you're looking for long trades, one, look for something above the cloud or breaking into the bottom of the cloud, and two, look for a bullish TK cross. So there's an orange line and a blue line here. Think of them, they're kind of means, but think of them as moving averages. If the blue one, which is a shorter term time frame, is above the orange one, the longer term time frame, that's the bullish TK cross. So that's kind of like step one. See bullish TK cross, and then look for a cloud exit, and then that would be a breakout, right? So the cloud is the same philosophy as support and resistance. So this would be resistance, a breakout above resistance, that's your entry. And then, here's another example down here, breakout above resistance. So that's what they call a bullish, a Kumo breakout, right? You're in the cloud. This is the Kumo cloud. And then this is a beautiful breakout right here, by the way. I mean, you're breaking out with massive volume here on this cloud exits. The only bad thing here was the lines were inverted, and they shortly after crossed and confirmed that. Here's another one here, though. You can say this was a good breakout too. We broke into the cloud, pulled back. That acted as resistance, pulled back, but the bottom cloud acted as support. So did these lines, and then it finally broke out. That's your exit. So at that point, you're looking for two ways to do it. Either you buy the initial breakout if you're watching it and you catch it, or you're looking for a throwback, and the point of support on a throwback are generally the Tenkan-sen or even the Kijun-sen at the line, but usually the Tenkan-sen is going to be kind of your first throwback point, so you can place orders there. So that's the Kumo cloud. And so with this one, the same higher time frame strategy applies. So let's kind of fast forward and go to the most recent time. And let's say I'm looking at this 4 hour, or actually let's go to the 1 hour right here. This is actually a really good example. So I'm looking at this 1 hour and I'm thinking, is this thing going to break? Is it going to be a Kumo cloud break? It had one earlier, it's failed breakout, pulled right back in. Notice there was a bearish TK cross here, so that doesn't line up too well. I'd like to see that on the upside, but on a breakout it could confirm higher. And so what you want to do is say, what is the 4 hour time frame? I'm looking to go bullish here. What's my upper time frame? So if I go to the 4 hour, this is above the cloud. We had a bullish TK cross here, so that's confirming. And so at that point, I'm saying, okay, that's a go, right? The trend is in your favor right here because you're trading bullish. You're in a bullish trend. You're above resistance. You're above cloud, above TK on the 4 hour. So then on the 1 hour, if this crosses and gives me a signal I'd be comfortable taking that, right? Because the 4 hours confirming. Now, if I went to the 4-hour chart and it looked like this, and it was living below the cloud, maybe a little bit more hesitant. Now, you always have to keep in mind the structure of the market, because here you're bearish, but here the market's starting to turn. Here you get a bullish cross. So even if it's below the cloud, I may still take that at that point because clearly the market is starting to change here. So it just depends on your time frame. So it works the same on all time frames, though. So that's really it. That's the bullish cloud exit. If you're looking for how do I find these, that's the bullish entries. So when you see a bullish cloud entry on the 4-hour chart, that is down here, right? That's this guy. So when you see a bullish entry, that's going into the cloud. When you see an exit, that's coming out the top end. All right, so that's kind of my quick summary. This is definitely not an in-depth. It's a little bit more to just kind of give you guys some things to consider there and to help develop some strategies. I mean, you could literally spend an hour on probably each of these, just kind of going over the real specifics of which indicators and examples and all that. But I wanted to show you guys a few there to consider. All right, let me look at the chat, see if you guys have any questions on any of these here. And if not, we can go back to the charts and take a look at some of the other names that you guys want to look at. Let me see here. What's your advice for day trade at BitMEX with 15-minute candles? Is 10x leverage safe? So here, that's a good question. It's a hard question to answer because at the end of the day, whether you're trading with 10x leverage or no leverage or anything, right? It's going to come down to the risk reward of your trade and your setup. So is your setup when you're buying something, is it a high risk setup or is it a low risk setup? Meaning, what's the risk reward, right? If I'm doing, let's say you're doing a, let me just give you a very easy example. Like, for example, the ontology, right? The ontology breakout point. Let's say that was the Bitcoin chart. Bitcoin was at all-time highs, had just posted a ascending triangle pattern, lower volume, and then it just throws a strong breakout. I mean, at that point, that's a very low risk entry, high reward. Then yeah, if you're 10x leverage, I mean, you're gonna do great. Versus if you're buying Bitcoin right now, where there's a lot of overhead resistance, and we're not really defined if we're in an uptrend or if we're still turning the corner, right? There's just a lot more to consider, right? Like right now, I mean, look at Bitcoin. Let me go to the 4-hour chart, right? Bitcoin back here, not bad, not bad, not bad. This is a good breakout. You could buy that. And then Bitcoin back here, probably wouldn't be going along with 10x leverage. At this point, this is bad, this is bad, this is bad, this is bad. Okay, down here, maybe we're starting to turn the corner. We're breaking into the cloud. The structure is starting to change. Resistance is very clear. Me personally, I'd either be buying dips, and you can see this dip came right back to the Dickinson line almost perfectly, and then keeping a tight stop, or I'd wait for breakouts. And here, this is signaling that, I mean, if it breaks out now, resistance is going to be at 8K. If it starts to take too long, resistance is lower at 78. So that's kind of my long-winded answer of saying leverage is safe if you use it correctly. If you're just forcing trades, if you don't have a system, if your stops are too wide, it's probably not going to be good, right? So it just depends. I'm hesitant personally to use 10x until, I mean, if we get back into a market where it looks like this, margin's fine. Generally, I'm just hesitant to use margin on crypto in general. Back here, right, even in 2017 when the market was going parabolic and bullish, using margin was very difficult because you get periods of this, right? And you get these 30% pullbacks. And if you're on margin, that crushes you. If you're on a normal account, you can survive that. It's not that big of a deal, right? Even if you get out of the way too late, even if you don't get out till back here, you can still survive that. On margin, you could get crushed. You were trading 10x 15-minute candles for 1 or 2%. Yeah, and that's the thing. If you're doing margin, generally you're going with smaller time frames, and that makes sense because remember this chart here, right? So if you're trading in this band, don't expect 10 or 20% gains, right? If you're trading 15-minute candles, you're looking for a couple percents. And if you're trading this, the percents get bigger. If you're trading 1 hour, 4 hour bars, then yes, you could expect 5, 10%, 20% gains and 30%, right? So it depends. If you're trading 15-minute, sounds like you are, then yeah, 1%, 2% gains, that's fine. And then you're using margin to magnify those gains, of course. So. All right. Any charts you guys want to look at, or are we good to go? We're well over our hour here, but I'm okay with hanging around for a little bit. Brandon's not okay with me hanging around for a little bit. I'm still watching this chart here. This maybe ascending triangle, maybe. There's just a lot of conflicting signals still, right? 4 hours, not exactly bullish, but it's starting to turn the corner. The daily is definitely not bullish. Intermediate charts, 12-hour or 16-hour, are kind of neutral, right? RSI is like right there in the middle. MACD still hasn't crossed the zero line. It's a very undetermined market, but we've seen these happen before, right? We've seen those big candles. So, I mean, think about that. If you get one of those candles here, bam, takes you right to 7,800 in no time. Let's see, Bitcoin Cash. Yeah, the nice thing about this one is it gives you an earlier entry, because I personally wouldn't wait until it broke above this. My breakout point would be right here. So not a huge margin, but it helps with stops and all that stuff, because then if you get in earlier, you get that extra small percent. So, but yeah, it's a very similar pattern, by the way. I mean, it's just, look at this rising pattern. So it's good. It's not bearish per se, but it's kind of a neutral pattern. But that's really your breakout point there. Unless you're buying these dips to the trend line, there's nothing wrong with that. Especially right here, right? If you like it here, then you're giving it maybe 3% or so, and that's it. If it breaks below that, then just get out of the way. But that's a little bit more of a preemptive buy, right? Which is fine. It's just a different strategy. You know, I prefer to buy into strength, but that's fine too. Ripple. Let me see. Ripple dollar first. Let me do it on Bitstamp here. Similar pattern. A little bit stronger, right? The dip hasn't been as lower on this guy here. And Ripple has been one of the stronger names during this most recent bounce off the lows. You can see it had a pretty decent up leg. This is actually a really good pattern right here on the 4 hour, considering the fact that the retracement has been very shallow. You had a 27% run up, and then it pulled back and not that deep, right? Pulled back 7%, and here it is pulling back just 3%. So this is a nice setup right here, and it's giving you an early entry right there. Let me move these lines to be a little bit more precise. Let me use this one here. I'd be going with Ripple right there. So what is that? 68.7. You call it buy at 69, as opposed to waiting for this here at 70. Right? It's a penny, but hey, pennies add up. The alternative is you think this is an ascending triangle. You buy it with the stop being this most recent low here, which was a little bit of a double bottom, right? So you can see that was a wick there and that was a wick there. And then so that'd be your stop. So if you bought it here, because it is above the moving average, you're looking at about a 3% stop, 2.5%. Or you wait for the breakout, which is about 1.5% higher, right? So risk reward here would just make me wait. I'd rather wait and pay 1.5% higher than risk 2.5%, because if this thing blows out, most likely it'll be on volume, especially if it happens when it's out here towards the right, and it'll blow right through here. And let me see, next resistance, it'll have to clear this resistance here first, so I'll give you 1.5%, and then next level up it's about 7% higher. 7 to, let me see here, 7 to 10% higher, so wouldn't be a bad little trade. 1 hour setting up good. So yeah, Ripple's good. There's another way to do it. If you do the candle bodies, you can do that, but then the risk is you get these little wicks. Let's see what else. Populous. Interesting move off the low yesterday. Let me go to the 4 hour here. I hate these crazy wicks that just mess up the charts here. Let me see here. There we go. That's a little bit more normal. All right, so yeah, it's just a very interesting move coming off the low. Clearly, it's still in a downtrend. I mean, you can see the dominant trend is still downward. This is a counter trend rally, right? Just like we saw back here. But it's still very much a downtrend. The fact that it's pulling back so much keeps me cautious, just because, I mean, these breakouts are nice if something's going higher and then like retraces a little bit and then has a breakout like that. Those are much stronger versus something's going lower and then just has a strong move off the low. There's just so much overhead, so much resistance here. But not to write it off. I mean, once I see a big volume move like that, at minimum, I should get on the radar and see if we get a follow through or something. But I just don't like to buy those generally. ARK. I'll go ARK Bittrex just because that's the big picture chart that I've been watching here. You can see the lines are adjusted a little bit here to account for this most recent dip. But if you look at the prior line, it was like right here. It is dipping below. And we rallied and we failed to rally, keep this rally going. So it just depends on, at this point, it's kind of no man's land, right? Like you could sell it, or if you're still holding, I mean, personally, I'd get out of the way below this little zone here, right? If it continues to just drift lower, then I'll just get out of the way and then wait for some renewed strength to show up or a break above this trend line here. And keep in mind, this pattern was a little bit symmetrical, and it could have gone either way, right? I mean, I was leaning bullish, and it still may turn around because it's still above this little support zone. But based on the pattern, you know, it hasn't really broken out yet above the upper trend line. All right. Let's see here. Digibyte. I haven't really looked at the charts a whole lot. Oh, nice. Digibytes is looking good. This was on the watch list. It's a good breakout. I've been looking for a break of this downtrend for a little bit here. You can see it's on the charts very clearly. Let me see. Let me go back to the 4 hour. Volume is very good on the 4 hour. That's a check. That's good. RSI clearly, MACD clearly. So everything is pointing go. So at this point, if you're not in it, I mean, if you're in it, good, definitely hold it. But if you're not in it, then you're looking for a throwback entry, right? Which good chance you're going to get it. RSI is at 80 on the 1 hour. This was a pretty big volume wick. So one, put some orders there, or two, do the method I was talking about where you see the retracement, and you take it on a break above the candle. So looking pretty good. Not bad. Not bad at all. Decred. I saw an alert on Decred. Let me see here. Yeah, Decred. So Decred broke out yesterday. Did give you a throwback right to the breakout point, actually slightly below. So if you had orders there, those were definitely filled and moved higher quickly. That's looking pretty good. And here's your follow-through candle there on above average volume. So far, this breakout looks like it's holding and it's working. Now, Decred's looking pretty good from the longer term perspective because we're approaching these highs back in here. So this line I have drawn is that prior high. Move that. So from here up to the line, right, that's about 3%. If it breaks above that, next real target is up here. It's around 27%. So might not be a bad trade there. So here's like, if you're looking at a throwback entry, here's a good example, right? Either you place the orders there or you're moving your line down the ways here, down the ways. And then we have this green hammer reversal candle. The next candle is the big green candle, even though it has a wick, definitely well above this, definitely engulfing the prior reds. That, if you were conservative and do a manual entry, that's your entry right there. And then you can see it just kind of sits tight for a while and then goes higher. All right, what else? Waves. Let me see. Waves was on the list yesterday, moving strongly. How's that looking? Oh, there it is. Finally pulling back. Yeah, I didn't want to chase it here, and I was thinking, oh, looks like I missed that guy. We go to the 1 hour. Here's your signal right here. This is usually not a good sign, right? Look at the volume. Just moved higher, big volume reversal. Couldn't take out the top of that wick there. Try it on the next candle. Looks like it's rolling over here a little bit. Now, this is on the 1 hour chart, so it's not the end of the world. 4 hour chart is still holding up, but it is breaking this shorter term moving average. Volume on the 4 hours a little bit lighter, but this green volume, that's selling, right? That's all sellers up here. So still might not be a bad one. The thing with this one, though, look at this, right? We just talked about it. This was a breakout, but look at the prior trend, right? The prior trend was down. So it's not like if you saw this same consolidation following a prior uptrend, much stronger of a breakout. So there's a little bit more of a reversal type of pattern happening here. Okay. I think that'll do it for now, guys. I appreciate you guys being here. Hope this helps. Hopefully it gives you guys some things to consider with regard to your strategy, with regard to timing entries and looking for the more profitable trades, because at the end of the day, we can't take them all. And so you got to pick and, try your best to pick the ones that have the most things pointing in the right direction and are looking the strongest, right? And it means sometimes you're going to have to let some go. It means sometimes you're going to pass on an opportunity that looked high risk, but turns out to be a big winner. But that's just part of the game. So, great. Well, thanks, everybody. Have a great weekend, and I'll see you all on the Slack. Take care.